Hello and welcome to the week ahead from the Financial Times in London. Here are the big stories we'll be watching this week. Will they or won't they? It's going to be a bumper week of central bank meetings, and the U.S. Federal Reserve is widely expected to raise interest rates. President-elect Donald Trump is set to detail his plans to separate himself from his business holdings when he takes office. And Inditex, the world's largest fashion retailer, reports third quarter results. So we'll start in the U.S., where Federal Reserve policymakers will gather on Tuesday and Wednesday to determine whether or not to raise interest rates for the first time this year. Markets are almost certain that there will be a rate rise. It will also be the Fed's first meeting since the election of Donald Trump as U.S. president. Here's our U.S. capital markets reporter, Joe Rennison, with more.
The eagerly anticipated Fed meeting is finally here. As far as the potential for a rise in policymakers' target interest rate goes, market indicators suggest it's already a done deal. Fed funds futures are pricing in 100% likelihood of the Fed increasing rates, with expectations heavily tilted toward an increase to a corridor between 0.5 and 0.75%. Arguably more interesting will be whether the Fed gives insight into its rate rise path for 2017. It's the first Fed meeting since Donald Trump's victory in the US presidential election, and since there's been strong inflationary pressure from Mr. Trump's plans for tax cuts and infrastructure spending, which has in turn pushed up government bond yields. The question is whether this will push the Fed to raise interest rates more quickly than it may have previously expected.
And on this side of the Atlantic, the Bank of England will meet on Thursday, although analysts are expecting a decision over further quantitative easing to be pushed back until next year. This follows the European Central Bank's announcement last week to keep its main interest rate unchanged and to extend its quantitative easing program until December 2017. But the amount of ECB bond buying will fall from 80 billion euros a month to 60 billion euros a month from April. Now, there's been intense speculation since Donald Trump won the U.S. presidential election about what a Trump presidency will actually look like. We've had some clues in the past month as Mr. Trump puts together his transition team and names key cabinet members ahead of his inauguration in January. What hasn't been clear is exactly how Mr. Trump will separate himself from his multiple business interests when he takes office. This week, Mr. Trump is due to host his first press conference since his election victory to clarify just that. Here's our U.S. policy correspondent, Barney Jobson.
Donald Trump has not held a press conference since he was elected, but by promising to hold the first on December 15 and making the topic potential conflicts of interest, he's chosen a highly controversial subject. Mr. Trump said at the end of November that he would be leaving his businesses, quote, in total. But as with so many things, he didn't explain precisely what that meant. We'll be hoping to find out more on Thursday. The real estate tycoon has faced criticism that he could use his time in the White House to benefit his wide-ranging business interests. Some people have even suggested that those businesses could leave him open to influence from foreign countries. One key issue is how legally Mr. Trump separates himself from his empire. Another is the role of his children. Mr. Trump has previously said he was going to leave his businesses in the hands of those children, but at least one of them, Ivanka, is playing a key role as an unofficial presidential advisor. So how do they fit in?
Ivanka Trump, Mr. Trump's eldest daughter, helped arrange the president-elect's meeting with Japanese Prime Minister Shinzo Abe. Mr. Trump's 3 adult children also serve as executive vice presidents of the Trump Organization. And finally, to the world of retail. And when it comes to designing clothes, Inditex tries hard never to repeat itself. The world's largest fashion retailer, which owns Zara, develops and produces quickly and in small batches. When a jacket or dress is sold out, it prefers to tweak the design rather than produce more of the same. So the Spanish retailer's business model is built around a never-ending cycle of innovation and iteration. But when it comes to the group's financial results, repetition is welcomed by investors. As Inditex prepares to report its third quarter results, here's our Madrid bureau chief, Tobias Bach, to explain.
For investors, there's something pleasingly reassuring about Inditex results. Year after year, quarter after quarter, it announces higher sales, more profits, and a fresh batch of store openings. That will also be the case on Wednesday when Inditex announces its results for the third quarter. The big unknown, as in previous quarters, is what has happened on the currency front. Inditex produces much of its output in Spain and in other Eurozone countries, but it sells most of its goods outside the Eurozone. That means that currency swings have a big impact. On this occasion, probably for the bad. Analysts are predicting a slight fall in margins based on currency effects, but over the long term, these currency effects do tend to cancel each other out.
And that's what the week ahead looks like from the Financial Times in London. Goodbye.